Hello and welcome to the Weekend Investing Daily Byte. Today is 13th of June. The Nifty is taking a back seat. There is no movement on the Nifty or the Bank Nifty. There is some movement in the larger part of the market. We will discuss that. The topic for the day, however, is around a particular index. And this index has been doing phenomenally well. And you can ignore this index at your own risk. But this is what this index is doing. This is an index divided by Nifty 50. When you see the ratio chart, that index went up like crazy in 90s. Then from 2002 till 2018, it had a huge run from 1 to 2.9, and now again from 2.1, and it's going much higher. If you don't focus on this chart, you should be able to guess which index I am talking about here. But we'll come to this towards the end of the session. Where is the market headed? Market is extremely flat. Nifty is up 0.3% today. Last 3-4 sessions you can see have been extremely flat. I mean, this is something unusual. uh, while there has been some selling in from FIIs in the previous days, now FIIs are also not selling big. In fact, there is a buying figure from yesterday, but there just doesn't seem to be enough trigger for the market to go up right now on the Nifty. However, the Nifty next 50 is making new highs. The Nifty Junior is closing at a new high today at 7910. Extremely good run from 60,500 to 70,900 in just a week or more. Mid caps making a new high every day. So every day you can see in the last 4 sessions, gap up, new high, gap up, new high, gap up, new high. So mid caps are definitely running 20,486, up 0.78% today. Small caps are running also. You can see every day it's a secular uptick, up 0.81% today at 16,718. And Bank Nifty, as with Nifty, extremely dull, extremely sideways, not moving at all, waiting for some trigger. Maybe the 50,000 mark on the Bank Nifty is causing jitters to the Bank Nifty bulls. What are FIIs and DIIs doing? Last day, last trading session, FIIs were also plus 400 crores, DIIs 234 crores. So one thing is for sure, the big FII selling has stopped, in the last few sessions. They may not be buying big yet, but the big selling has been stopped, and that is pretty good news for now. DIIs, of course, have been buying on a daily basis since the last few months. Today's heat map, a very mixed bag. You had some stock specific action. Mahindra and Mahindra, Titan, Divi's Lab, L&T, HDFC Life, IndusInd Bank. These were the stocks that were going up along with some IT names. ICICI Bank losing some ground along with Axis, Bharti Airtel, Power Grid, Levers, Britannia. These were the stocks that were down today. In the Nifty Next 50, there was more green than red. You can see that there was good movement in public sector enterprise stocks, HAL, BEL, PFC, etc. And you had some good moves in real estate. So you have DLF moving up. Uh, you had some nice moves in capital goods, Siemens, ABB, and some down moves in FMCG, Dabur, Marico, Godrej CP, some down moves in commodities and cement, basically correcting after yesterday's strong move in cement, and some down moves in some power stocks also. Sectoral trends, again, real estate has taken the cake, 2.2% up for the day. In the last week gone by, real estate is up 6.9%. In the month gone by, it is at 18%. In a month, 3 months gone by, 35.5%, and 115% for the year. This is one sector that at every level, people have been skeptical about it. And as they say, bull markets run when there is most skepticism about any sector or any stock. Uh, IT did well today at plus 1%, although on a 3 monthly basis, IT is still recovering from a fall. Public sector enterprise stocks doing all right at 0.8%, for the week gone by 6.4%, and a decent 115% for the last 12 months. Autos, pharma, infra consumption, mild gains, although autos have done really well in the last 1 year at 73.2%. So no complaints on that. Some sectors were totally dull and out. Metals, PSU banks, energy, private banks, totally flat. Private bank, I would like to point out, at 9.5% for the last 12 months. It is the weakest link in the entire sectoral table. And a lot of money has gone into private banks in the last 1 year. So a lot of times we buy stocks that have great names or have done very well in the past, but the market is always forward looking. So nobody was talking about real estate, nobody was talking about metals or public sector enterprise stocks a year and a half back. And those are the ones that have done really well. Even pharma has done reasonably well at 52.7% for the year. So look for strategies that will automatically give you those winning stocks in your portfolio, because it is very difficult otherwise to guess what sectors are going to do well in the next 1 month, 3 months, 6 months, and 12 months. You need to have self-correcting strategies that will automatically take weaker sectors out and bring stronger sectors in. FMCG also, for that matter, has been a very weak link of the market, 11% up for 12 months, while 11% is not too bad, but when you compare it with a lot of other sectors, 11% is a big miss if one was allocated in any big way in the FMCG sector. Real estate index very strong. Last 7 sessions just going up and up and up, and sectors that are at a new all-time high are telling you that there is more to come likely. There is very high probability that they will continue to go up. FMCG made a strong weekly move in the last week, and in the current week it is softening a bit. Most likely it is just a corrective move, and that FMCG move can again start. Stock spotlight is on Sobha. Sobha, this is a almost a 14-year, or how much is it? It's more than 17 years chart. Uh, and one thing I want you to see from this chart is, as soon as the stock hit an all-time high in at 1,000 rupees, it really started to run like nobody's business. From 1,000 to 2,100, it has doubled in a matter of hours. And imagine somebody having had bought it in 2007, and at 17 years later, if they sold it at 1,000, destroying their entire capital over 17 years, what kind of pain they would be sitting at today. So never sit in stocks just because your cost price is has not been met. You have to evaluate stocks at each time, at each moment. And if the stock is telling you that we are going down, stay out of it till it gives you a signal that the stock is actually moving up. The same story has happened in macro tech developers, again a real estate stock, with better known with the brand name Lodha. Again, you can see in October 2023, it hit an all-time high at near 750 rupees, and it has quickly doubled from there to 1,500 rupees. So very strong sector right now, and very strong moves in some of these stocks. Gold totally flat. Gold had a big flash when last evening the inflation came out to be lower than expected on the US markets. There was expectation that FOMC will be very dovish towards the speech at night, but the FOMC speech was pretty dull. Mentioned that there may be only one cut this year and 4 or 5 cuts in the next year. So gold retraced back this entire 1,000 point move and is sitting at 71,500. Now we come back to this topic that I told you at the beginning of the session. Ignore this index at your own risk. So which index am I talking about? You would have guessed if you have zoomed into your phones. This is the Nifty Junior that I'm talking about. So if you divide the Nifty Junior to the Nifty and make a ratio chart, this is what this chart will look like, where the ratio actually moved from 1 to 3 in the year 2000, then collapsed back to 1, then moved from 1 to 2, 3 again, then came back to 2, nearly 2, and now is gunning for 3 again, and who knows how far it'll go up. So this is a very strong trending index, and this is the only place where large caps are giving a run to small caps. I mean, imagine a large cap index which is mimicking the style of a small cap index, and that is what Nifty Junior is doing. If I show you some performance metrics, then from November, Nifty Junior is up 65% in just a matter of less than 7 months. And small cap is up only 44% in this period, and Nifty is up only 24%. This is a large cap index that we're talking about. Again, if I see a longer view from 2004 onwards, in the last 20 years, Nifty is up 1,400%, small caps are up 2,100%, but Nifty Junior is up 2,340%. So beating the small cap index also by a decent margin, and beating the Nifty by a very wide margin. So imagine, you are invested in the best stocks of this particular index, that will even give you a better outcome than this particular index. So you need to be focused on what is that pocket of the market that is going to be give you an explosive return. And Nifty Junior versus Nifty, if I see even further back, almost 30 years of data, then you can see Nifty Junior is at 6,000% up versus Nifty at 2,200% up. So the magic here, what is happening is this, that the strongest stocks from mid caps move into Nifty Junior. So, the 101 to 250th category score on the market cap, actually the strongest ones from here move into this middle tier of Nifty Junior. And these are the stocks which have, which are growing like rapidly, going from mid cap to large cap with a very strong, future ahead of them. And then once they are, over researched, once they have achieved that large cap growth potential, then they moved into Nifty at some times. And once they move into Nifty, they don't have that kind of growth left because it is coming on such a large base. So the sweet spot where they perform the best, these stocks, is the Nifty Junior. And out of this 50 stocks also, if you are able to select the top 10 or 20 strong stocks, that is the real key to making some great money even in large cap names. So that's all I have for today's Daily Byte. Thank you so much for watching. If you liked this content, please do share it with your friends and family. Do subscribe to this channel, and I'll see you in the next one. Thanks. Bye.